Hello and welcome to the paid weekly recap for the week ending May 15th, 2026. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel, and the creator of the patent-pending artificial intelligence behind the paid system. Before we get started, normal disclosures. Options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and/or the team at Yellow Tunnel may have a financial interest in the securities presented and the trade ideas. I also urge you to read the characteristics and risks of standardized options available at the link highlighted in blue. If you need more time with the disclosures, please go ahead and pause the video now. Otherwise, we'll get into the recap for the week. So the week started off very similar to what we've seen in the past. Now, the biggest issue I think that really triggered the market a bit this week was inflation. We had some inflation data early in the week that was a bit alarming. It was a bit higher than expected. Further, we had President Trump meeting with President Xi from China. And at the conclusion of that, we saw a spike in interest rates. The combination of inflation and some of the commentary about those meetings allowed for interest rates to rise. And in fact, we've started to switch the model in the expectations for the Fed that we may be looking at a rate hike as the next move rather than a rate cut. That started to put a little bit of concern in the market. We saw equities on Friday start to pull back. We made a new high on Thursday, but that concern about the rate hike and that spike in interest rates, the yield on the 10-year getting up towards 4.6% was enough to finally start to pull back the market and put a little bit of fear into the bull case. The bear still seems to be nowhere to be found. It overall looks like this is more profit taking than anything, but the bear may get engaged. If we start to see further pullback, that may be enough to start to put the bear back in some control in the near term. Overall, though, I mean, we've seen the S&P push above an 80 RSI for weeks, well, at least above a 70 and above an 80 recently on Thursday. And this is an overbought market. It's a bull market that is overbought and needed. It was due for a pullback. So maybe this was all just an excuse to get that profit taking into the market, allow for a little dip, and then see if the bulls really still have that conviction that they're willing to buy here. Tech similar. Semiconductors have been absolutely dynamically bullish for weeks, months. They've been going absolutely crazy. And now we haven't seen it follow through to everything in tech. It's been very concentrated on semiconductors. But again, finally on Friday, we saw a little bit of a dip, not significant. Tuesday, we saw a little bit of a dip on that inflation number. Friday, we saw a little bit of a dip. It doesn't seem to be a panic selling mode here, but that can shift quickly. If we start to see a bigger pullback early in this upcoming week, we may start to see that result in a falling knife, but it's chicken and the egg scenario. Seeing selling can lead to more selling, but a lack of selling doesn't seem to be triggering any selling. So when does that selling begin that starts the selling? Because if it starts, it may continue. What's the starting point? Was it that inflation number? Not on Tuesday. Was it the meeting with Xi? Not on Friday, but maybe a little bit. We'll see how things go this week. Small caps have been actually relatively weak here. So through the beginning of or the end of last year, we saw small cap rotation, money flow coming out of tech and into small caps. We had stagnation in small caps, a little pullback, and then coming out of the lows in March, the bull market was really dominated by tech. And so small caps have gone back into a more weakened state. A little bit worse on Tuesday than tech or the broad market. Less of a jump back. We didn't make a new all-time high on Thursday. We pulled back a little bit more on Friday. We got below the Tuesday lows. Things just don't look great there. And the financials perhaps are part of the trigger there, where financials do tend to be interest rate sensitive. So some of these interest rate sectors in the small caps certainly getting hit more. Although we do have generally still bullish energy prices, and that's helping XLE. Now, the VIX finally did try to test in the 19s on Friday, but it didn't really get crazy yet. The fear is really not there. Above 20, I think we'll start to see some more fear indicators here. We may see some opportunities as a result still in the energy sector or other sectors that are a little bit less rate sensitive. We'll be watching those watch lists this week for new ideas. We do still maintain that bullish view in MUR. And even with the rally on Friday, it is still down small. The 42.5 calls that were added about 2 weeks ago are still down small because we were close to 42 at the entry point. Because they're June, they have some time because the energy markets continue to be bullish, continuing to hold. And I think that price action on Friday actually really justifies it as opposed to being a quote, sort of a bailout, now take a smaller loss. It looks like this is starting to set up a more bullish momentum scenario. We'll see how things go again this week. If energy prices start to come down, if oil prices start to come down, that'll quickly trigger an exit. But if they continue to be bullish, that will allow for some further upside here in MUR, Murphy Oil, and it could be end up being a nice winner instead of taking the loss earlier on a week or two ago. Overall, lots of opportunities that we're still seeing in that live trading room. Please be sure to join us. We're talking through earnings. We got Nvidia this week. It's going to be another very active, interesting week for the markets. We're going to be looking for some rotation, some new thought processes from the AI as we look for where that investment flow is going after these couple of dips that we saw last week. We might start to see some rotation, and that could set up some really interesting ideas. So we'll be watching for those ideas again early on in this week as well as throughout the week. All right. And then if you have questions, join us on the live trading room or email us. I'm Keith at yellowtunnel.com and Vlad is Vlad at yellowtunnel.com. Thanks again, everyone. Looking forward to seeing what the market brings this week.